everybody and welcome back to Shalika Sharma Stories. Today we are going to talk about a very important principle in financial planning, which is that you should always try and increase your income streams. You should not limit yourself only to one source of income. Dividend income is one such source which you can add to your portfolio of investments. A very interesting point to note here is that dividend income up to rupees 10 lakh is absolutely non-taxable. So therefore, you should aim for shares which can actually give you a good dividend income. And today in this video, we are going to discuss about one such share, which is National Aluminium Company Ltd.
First of all, let us talk about the basics about the company. NALCO or National Aluminium Company Ltd was incorporated in the year 1981 and has its registered office in Bhubaneswar. It is mainly engaged in the business of manufacturing and selling aluminium and alumina.
Let us look at what actually the company is producing. So the company is into the production of bauxite, aluminium hydrate, aluminium, power net and wind power.
Now also let us look at the production performance of each of these. Now if you see in this particular slide, all the numbers are given in 1000 metric tons. For simplicity, I am going to use all the numbers that are given in these particular charts. Now let us look at the production of bauxite. If you see, in 2014-15 it was around 5700 and gradually it increased to 6300, 6800, 7000 and in the previous year it was around 7200. Similarly, if we look at aluminium hydrate, from 1851 in 2014-15 it increased to 2152 metric tons in 2018-19. Now if you can see, both these have increased their production gradually in the previous 5 years. What this shows is that there is a continuous increase in the demand for these two items, and that is why the company is working on its capacity, expanding its capacity so that it can increase the production gradually, which is a very good indicator for the production performance of the company. A similar trend is visible in aluminium and power generation also. Both these things are also increased their production gradually in the last 5 years, which is a very good indicator again. The market capitalization of the company at the current market price of 31.75 on 30th April is around 5,933 crores. Week high for the company is 52 rupees 90 paisa and the 52-week low was 24 rupees 40 paisa. If you compare it with the current market price, which I have taken as of 30th April 2020, it was 31.75, which means that currently the share is trading at a 40% discount to the 52-week high, which makes it a good and interesting share to be analyzed. Looking at the shareholding pattern of the company, we find that the promoter and the promoter group holds 51.5% shares in the company and the public holds 48.5%. Looking at the bifurcation of this percentage, we find that the promoter here is Government of India through the Ministry of Mines. The rest 48.5% is with majorly mutual funds, 5.9% with ICICI Prudential Infrastructure Fund, 6% with some financial institutions and banks, around another 5% with LIC of India Profit Plus Balanced Fund, and the rest 23% is with others, which includes several small shareholders. A very important point to note here is that none of the promoter shares have been pledged. That means the company has not used any of the promoter shares to raise loan against them, which also is a very good factor for the company. On analyzing the balance sheet of the company, I found that the net worth of the company is around 10,500 crores, which means that the book value per share comes out to be 56.20. Now, a very important point to note here is that currently the share is trading at around 31.75 and the book value per share is quite high than the price at which it is trading, which makes it a very good share. Now, let us also look at the price to book value ratio, which if below 1 is considered to be very good, and this share in particular, NALCO, has around 0.56 price to book value ratio. Also, I found that the ROCE of the company, which is return on capital employed, has been constantly increasing in the last 2 years. From 8% in March 17, it rose to 20% in March 18, and finally 26% in the last year. Now, ROCE means that if you invested 100 rupees in the business, then in March 18 you got back 20%, in March 19 you got a return of 26 rupees. Comparing it with other companies in the industry, it seems that National Aluminium Company Ltd has quite a good ROCE as compared to others. Moving on to the profit and loss account, we see that the sales as well as the net profit has grown in the past year. In March 2019, it increased by 19% and the net profit increased by 29%. Now, if we look at the revenue distribution of the company, we find that 58% of the company's revenue comes from the sale of alumina. The second here is metal sale, which is 37% of the total revenue, and finally we have some small portion, a portion to power and some other income. And now we come to a very important and a very interesting analysis. This is of earning per share and dividend per share. If we look in March 2018, the earnings per share was 6 rupees 94 paisa per share. In March 2019, the earnings increased to 9 rupees 29 paisa. The dividend payout in the year March 2018 was 82%, which means that the shareholders got a 5 rupees 70 paisa on every share that they held as dividend. In March 2019, the dividend payout was 62%. That means out of the earnings of 9 rupees 29 paise, the dividend given out to the shareholders was 5 rupees 75 paise. If we look at the dividend yield, how much we are getting as a return by investing into the shares at the current market price of 31.75, we get a return of 18%, which as of now should be considered as a very good return considering the other investment options which do not give such a return percentage. I have also done a SWOT analysis of the company to take a complete overview of the company and to understand the company in detail. Now, if we look at the strengths of the company, considering that aluminium is always in demand and is utilized in so many products, it has a very good presence in the domestic and overseas market. Another important point which I discussed in the beginning of this video was that none of the promoter shares have been pledged. This means that the company has not tried to raise money by pledging the promoter shares. The third important point here is that as we saw in the previous slide, there is a very high dividend yield percentage, which is around 18%, which is considered to be very good in the current times. Again, ROCE, the return on capital employed, it has actually improved in the last 2 years. That means whatever money is being invested in the company, a very good percentage is coming back as a return on it. Looking at the weakness of the company, considering that the company is working into a natural resource, it has a limited production capacity. However, the company has reiterated over and over again that it is constantly doing researches to make sure that the production capacity is gradually increased. Now, looking at the opportunities that are available for the company. As I said earlier, because of its versatility, aluminium finds application in almost every item, and therefore the demand for aluminium is there to stay and would always keep increasing. Demand is expected to grow at the rate of 7 to 8% owing to the growth in sectors like electricity, transport, building, construction and packaging. We all know that the government of India is also expected to invest highly in the infrastructure sector, which again will give a boost to the demand of aluminium. Looking at the threats, these are threats which are common amongst most companies today. Chinese aluminium domestic demand has gone down, and because of which the Chinese aluminium producers are exporting to India, and hence there is a pressure on the prices. The second threat which the company is facing is very general and is common to all companies altogether, which is of COVID-19. However, considering the strengths and opportunities available to the company appears to be in a good position overall. I would encourage you all also to undertake a similar research, and if found good, you must also invest in NALCO and add it to your portfolio of investments. It can actually increase your revenue stream in the form of dividend income. And considering that the share is currently trading at 40% below its 52-week high, it can also lead to capital appreciation in the future.
So, I hope you all found this video to be helpful, and if you have any queries, you can always mail me on my email ID, which is given in the description box below. I have already answered some of your queries that you sent me on the previous video on Reliance Jio deal. If you found this video to be helpful, please don't forget to give it a big like, share this video, and don't forget to subscribe to Shalika Sharma Story. Thanks for watching.